and Ambit Capital welcome you all to Ahluwalia Contracts 1Q FY22 earnings call. We are pleased to have from the management Mr. Shobhit Uppal, Deputy Managing Director, Mr. Vikas Ahluwalia, Director, and Mr. Sabir Singh, Chief Financial Officer. In terms of the format, Mr. Uppal will give brief remarks on 1Q results, and then we will open the floor to Q&A. Sir, over to you.
Thank you, Varun. Good afternoon, everybody. Ahluwalia Contracts India Limited announced the financial results of Q1 FY22 on 10th of August. During Q1 FY22, the company has achieved a turnover of 580.10 crores and a PAT of 34.79 crores in comparison to a turnover of 249.85 crores and a PAT of 7.48 crores in Q1 of FY21. The company has registered year-on-year growth of 132% in revenue and 365% in PAT. EPS of the company for Q1 FY22 is 5.19 as compared to 1.12 in Q1 of FY21. During Q1 FY22, the company's EBITDA margin is 10.84% as compared to 7.42%, and a PAT margin of 6% as compared to 2.99% in the corresponding period of the last financial year. Net order book of the company as on 30th June 2021 stood at 7115.33 crores to be executed in the next 2 to 2.5 years. The company is L1 in 2 tenders having an aggregated value of 1160 crores. Thank you. We are open for questions.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may enter star and 1 on their touchtone telephone. If your questions have been answered and you wish to withdraw yourself from the queue, you may enter star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, you may enter star and 1. We have the first question from the line of Sita Raman from Spark Capital. Please go ahead.
Hello. Thank you. So my first question is, what is the big pipeline that you see across for the rest of the year?
Yeah, Mr. Sitaraman, I can barely hear you. I heard this question, but थोड़ी sound clarity नहीं है. Our tenders that we have submitted are about 6,500 crores.
Okay.
Submitted or under submission.
Okay. Okay. And then now you are able to hear me, sir? Hello?
Yeah, I can. But the voice is a little muffled.
Okay, and for me it is clear. Okay. I am also off the speaker. Hello.
Are you using?
Yeah. Okay, go ahead.
No, I am also off the speaker. No.
Okay.
Okay. So what is the guidance that you for FY22 for FY22 that you see, and what is the capex that you are expecting to invest?
So I think last time around I'd given a guidance of about 2,500 crores fresh orders in this financial year. You're talking about order inflow, right? Guidance for that?
Yeah, the revenue guidance also.
I said about 15 to 20% growth.
Okay. No, fine. Because right now the COVID situation has also improved, so I was just asking from that front. And the EBITDA margin will be around 11 to 12%?
Yes.
Okay. And then what are the segments that you see, like the private sector and also what is the confidence level in the market, and can you give some idea on that?
Look, there seems to be in the private sector, there seems to be in some geographies, there seems to be an uptick in the residential side of private sector works. But, having said that, we continue to kind of be risk averse as far as private sector development is concerned, especially residential. It's not a focus area for us. On the public sector side, hospitals continue to be an area where the various governments are investing. Just yesterday, we submitted for the Delhi government, there were 3 large tenders which we submitted. The aggregate value was close to about 2,000 crores, approximately, for these jobs.
Okay. And can you give an idea about the various the unbilled revenue, the receivables, and all those things? Can you give an idea of that? How it stands at the end of June 21?
Sadhbir will answer this question. Please go ahead.
This is unbilled revenue, 359.40 crores.
Sir,
359 crores.
359 crores, okay.
And what about others?
And the receivables and...
receivables, that is around 619 crores, including retention money of 198 crores. And mobilizations are 327 crores. Trade payables, 588 crores.
Trade payables is 588 crores, okay. And is there any signs of weakness that you see in with respect to the state government, with respect to handing over projects, or with coming up with new projects because their resources?
Just repeat that question, please. Not very clear.
No, basically, among the state governments, do you find any of the governments stressed because of the COVID impact? It would have been
Bengal is stressed.
Hello?
West Bengal.
Oh, West Bengal is the one which is stressed with respect to... Okay.
Yes.
With respect to other governments?
Look, the other states are also stretched, but relative. What I've said is Bengal seems to be, slightly worse off situation post-COVID.
Okay, fine, sure. Okay. Thank you, sir. Thank you.
Thank you. Participants, if you have a question, you may enter star and 1. We have the next question from the line of Rikshit Khanwal from Axis Securities. Please go ahead.
Hello.
Yeah, hello. Hi.
Hi, sir. Parikshit here from HDFC Securities.
Hi, Parikshit.
So, Mr. Khanwal, please use your handset. We cannot hear you clearly.
Okay, just one second. Yeah, hi, Shobit. So, Shobit, congratulations on a good quarter. So, my first question is, was this quarter impacted in any ways in terms of margins or costs related to COVID? Because we do see improvement in margins. So, is it like a normalized margin now, or there was some impact because of the COVID-related cost?
It's a loaded question. But yeah, there was an impact. I can't deny that. April and part of May, the second wave was there. So the impact obviously was there. But notwithstanding that, we have been able to achieve good results. Because on the ground, the projects didn't really stop. But yeah, the impact was there.
Okay. Because the top line has also been quite good. I was expecting better than expectation. So what could have been the miss in revenues because of COVID in this quarter? So ballpark, what could potentially be the loss in revenues you could not book because of COVID-related issues?
It's very difficult to give you a figure, but I can say if COVID wouldn't have been there, we've been impacted by about 10%.
About 60-70 crores worth of revenues.
Yeah.
Okay. Just on the ordering bit, you said you already are L1 in about 1,300 crores worth of projects, 1,160 crores worth of 2 tenders. And you are also bidding for more tenders. So you are still guiding a conservative number about 2,500 crores. And I assume that Central Vista and all are still not figured out here. So if you bid for that, so do you think that this number is quite conservative?
Look, there's a reason for that. The earlier question which was asked of me as to which states are impacted financially. So what we are seeing is that healthcare aside, a lot of other projects may get impacted. The tendering is happening, but 20, 30, 40% into the life cycle of a project, we are seeing that they may get impacted because the governments are stretched. So we are very wary, right? That's why it's better to be conservative going forward.
Okay. Just lastly, so all this cost overruns and escalations and issues regarding one-offs which will be in coming quarter, so quarter on quarter. So is it all behind, right? Nothing, no negative surprises as of now, and maybe in the next couple of quarters. So everything is being done and dusted. Just to reiterate what you said last time. Just wanted to
Yes. Yes.
Okay. Thanks, Shobit. That's all from my side.
Thank you so much.
Thank you. We have the next question from the line of Nitin Arora from Axis Mutual Fund. Please go ahead.
Hi, sir.
Hi, Nitin.
Sir, just question on the order book. Can you throw some light specifically on orders of Jammu? Because in Q3, I think that order was closer to 1240 crores. Q4, I think we didn't get the presentation, which always been given by the company in terms of order breakup. So can you throw some light how Jammu has moved in the overall backlog? And also, if you can touch base on the Bihar projects. I think that Bihar project also in Q3 was to the tune of what you have in the order book of 640. So can you touch base on these two projects, how they are moving now of the overall backlog?
Okay. Jammu, the order value is 1,253 crores, the aims. Obviously, last year, the calendar year last year, it was a non-starter because of COVID. But now, I did mention in my last Concall, the project is now moving ahead and moving ahead fast. I think we are now logging a monthly billing there of close to 20 crores, which will ramp up considerably in this quarter and onwards. COVID third wave not happening. But it's fully mobilized. We're moving full speed ahead on Jammu. As things stand today, we have done a billing of close to about 150 crores there, and we hope to achieve a run rate there anywhere between 25 to 30 crores per month rest of this financial year. So that answers your query as far as Jammu is concerned?
Yes, sir. And what about Bihar, sir? I think that was total Bihar projects for, 640 crores. How that is moving now?
So Bihar is moving, but Bihar is not fully up to speed as yet. Rains are pounding that state. That is impacting our project run rate, monthly run rate. And also Bihar also seems to be stretched, so not as badly as Bengal, but yes, that's also stretched financially. But going forward, we foresee that the situation will improve there in the second half of this financial year.
Basically, I was asking, wanted to know from you, is if these two bigger areas, because Central Vista, you have done a lot of billing already. And if these two doesn't move that fast, do you see a risk?
It is moving now. Jammu is moving, I told you.
Got it. So you don't see a risk to at least 15% growth this year in your revenue?
No.
Got it, sir. Got it.
And but COVID situation, if things continue to remain the way they are, I don't see any threat.
Right. Sir, generally, a question on the margin. I understand,
Just to further take that point forward, even our projects, hospital projects in Hamirpur and Chamba have started moving now, full steam.
Great to hear that, sir. Sir, generally, given our margins are closer to 10% plus in this quarter, given our 15% guidance, we'll be doing somewhat the similar revenues in the next 3 quarters, plus and minus here and there. Margins, you're still guiding 11.5%, so which optically, goes towards 11.5 consistent. You don't see that as well, given what you have done. I mean, whatever the risk or the provisions you are creating in the first quarter, you don't see much of the provisions to happen.
Yeah. So, yeah, I stand by my guidance. So what are you saying? Are you saying that guidance is conservative, or you feel there is a threat to that?
No. So I'm saying, sir, on a 580 crore top line, we are delivering 10.4. And in our past, on such top lines, we have delivered more than 12%. So I understand it's a COVID quarter, there would be some ECL provisioning would be done. So I'm just trying to understand if the top line is largely remaining the same based on your 15% growth guidance. This margin ideally you think should improve towards 11.5 in the next 3 quarters. That's the way to look at it. Yes.
As I said, I'm qualifying that statement by adding that COVID situation, if everything keeps running the way it is right now, yes, I agree with you.
Got it. Sir, lastly, though you touch base on the big pipeline of 6 to 6,500 crores you have bidded, can you throw some light which are these segments, which are these orders? Is something new also we are trying to bid? That would be really helpful. Thank you, sir.
So as I said, 50 to 60% of this order pipeline is hospitals. Then some of this is about 20% is commercial, and rest is institutional.
Got it. Thank you so much, sir. I'll come back in the queue. Thank you.
Thank you.
Thank you. Before we move to the next question, we request participants to use their handsets while asking a question. We have the next question from the line of Ashish Shah from Centrum Broking. Please go ahead.
So question is on the interest cost for the quarter. So we are seeing a quarter-on-quarter reduction in the interest. You should note of why it would have come off sharply on a quarter-on-quarter basis.
As we mentioned in our last call, the interest costs were primarily there on account of mobilization advances. We have paid off some portion. Yeah, so Sabir will give you the details.
Hello.
Hello?
Yes, yes.
Can you hear us? Yeah, Sabir.
Yes, yes.
Mobilization advance interest is 6.34 crore out of 11.47 crore. And also due to lease liability, that interest cost that is accounted for 1.09 crore.
His question is it has come down. So
yeah,
that's come down because of recovery of the advance. We paid off.
Okay. So because of the unwinding of the mobilization. Okay.
Yeah.
Sure. Secondly, sir, do our numbers include any provisions for any of the past legacy issues, or this is the normal level of expenditure?
Normal now.
That's normal age-wise provisions has been made.
Sorry, I couldn't hear you.
That's due to age-wise, basically due to breakup more than 1 year, more than 2 years, more than 3 years. According to that percentage-wise provisioning has been made.
Right, but there is nothing pertaining to the legacy.
No, there is no any specific event.
Got it. So lastly, what would be the cash balance as of June?
That's 219 crore.
Okay. Sure, sir. Thank you.
Thank you. We have the next question from the line of Vibhor Singhal from Phillip Capital. Please go ahead.
Yes. Good afternoon, sir. Thanks for...
Good afternoon, Vibhor.
And congrats on a very great set of numbers yet again.
Thanks, Vibhor.
So just basically wanted to get one clarity. You mentioned that you have bid for 2,000 crores of projects in Delhi. These are all hospital projects, is it?
Yeah. So Delhi government came out with 3 packages yesterday. The bid was yesterday. Interesting concept. These are spread over 7 locations. They want them to be built in an emergency for a potential third wave. So they want these hospitals to be completed in 6-7 months.
Okay, and are these like some kind of makeshift hospitals which are going to be dismantled later on, or is it like permanent structures which are going to stay and they can probably be later converted into bigger ones or something like that?
Yeah, the second part of what you're saying seems to be right. They are steel structures, they would be, I think, retained as some other. They would be converted into something else. So let's see. It's not that they'll be dismantled.
Right. Got it, sir. And sir, as you mentioned, I think the execution on the Jammu AIIMS is on track. Just wanted to basically get some status update on other projects like AIIMS Kalyani, Nagpur project, and also the Alipur Stadium, and the 2 projects in Bombay.
Okay, so AIIMS Kalyani and Nagpur handing over stage. I mentioned last time that in September, October, we will be handing them over. So that's what's happening. In fact, half of the project, the academic part areas, that we've already handed over, both locations, and the main hospital block, we've already handed over 2 floors each, but complete, I think it will be completed by September end, both these jobs. As far as the auditorium is concerned, project is moving. We are logging a billing of 8-9 crores every month. But as I said, Bengal is cash strapped. But I think completion is around March next calendar.
And for the Mumbai projects?
As far as Mumbai, Vikas, you want to take that question?
Mumbai, hi Vibhav. Mumbai is, they started off a little slow initially because, immediately the lockdown came in and then the rains. Rains were not so kind to Maharashtra this time, especially Mumbai. But now for the last 2 months, now they are on track. Sion is going to be a little slow project because it is to be done in parts. We have to make first one building and then a couple of buildings are going to be demolished. Regarding the other one, which is the depot, that is now on track. So we are back on, whatever time we've lost, we are going to cover it up.
Right. Great to hear that, sir. Also, sir, if I could just get, there is no debt on the balance sheet, right, at the end of the quarter, as it was last quarter as well?
No debt.
22 crores.
Right.
No. Yeah, there is a small amount of debt.
22 crores.
Please clarify. Yeah, 22 crores.
22 crores. Sure, sir. Lastly, sir, just one bookkeeping thing. If I could get the order book breakup in terms of the commercial and all those numbers that we provide.
This is commercial 5%, hospital 53%, and infrastructure 13%, institutional 14%, and residential also 15%.
Right.
And sector-wise government 81%, private 19%.
Right. And region-wise, sir, northeast, south?
Region-wise, east 33%, north 45%, and west is 21%.
North is 45%, right, sir?
West 21%.
North is 45, yes.
45. North is 45.
Yeah. Okay, sure. Great, sir. So just one last, if I could just squeeze in maybe one more question. I know I've asked maybe just one more question if I could squeeze in. Sir, in terms of the order accrual, I think for the last couple of years we have been very, very strong. And as you have mentioned before, that I think the government focus on healthcare is also quite strong, which should augur well for us given our expertise in this segment. Any plans of going into the affordable housing segment, which is also seeing quite a big push from the government, or is that going to be a no-no for us?
No, not in the short term. No.
Not in the short term. Great. So thanks for that to the point answer, and wish you all the best, sir, as always.
Thank you. Thank you so much.
Thanks.
Thank you. We have the next question from the line of Charanjit Singh from DSP. Please go ahead.
Hello, sir. Good afternoon.
Hello, Charanjit.
Mr. Singh, I'm sorry to interrupt. Please use your handset.
Okay, yes, sorry.
Hello, can you hear me, sir?
Please go
Yes,
ahead.
Charanjit. Yes.
So, sir, congrats for a good set of numbers.
Thanks.
First question is, you talked about, there could be some stress in some of the state government finances. So in terms of the working capital front, how do you see things panning out? Could we see, stress on the working capital side, and how we are trying to manage that? That's my first question.
So there is a bit of a stress, but we are managing it through internal accruals.
In terms of the number of days, you see, how much it could inch up, and especially, generally we had followed that policy that you tend to see the payments and then deliver on the work. So how does that pan out? Because these are more state government projects which have fixed timelines, and so on overall number of working capital days.
So as Sukhbir, you want to answer that? Then I'll.
That's working capital days has been. That working capital has been increased to 107 days if we compare to the last quarter. That's 97 days, and but there is slightly improvement in debtors days, but definitely due to increase in the unbilled revenue, that has increased because of the certification that is taking place in another 1 or 2 months. That's why there is, and due to GST, we are taking that in unbilled revenue. Otherwise, that was part of the revenue in earlier quarter. So that's why, but there is not a major increase in working capital days. Still, that gap has been filled by our out of our internal accruals, and there is not any major increase in debt also. So that's why.
So, as you yourself said, like Bengal, we see the state checks. So we have 2 projects directly with the state government. So we are monitoring the cash flow situation and executing works on the ground based on whatever the indications from state PWD. But these projects, I am confident that we'll be able to finish both these projects before the end of this year, financial year that is, because these are very visible projects and close to the powers that be.
Okay, sir. So the other question is on the margin front. While I understand this is a COVID impacted year, we had been, doing certain provisioning in the past couple of quarters. So we had seen a peak margin of more than 13%. And if we have to, just understand from a maybe a 2 years trajectory perspective for Ahluwalia contracts, how do you see this margin trending upwards or remaining at 11.5%-12%? If you can just give some color on that based on the order backlog which you have. Yeah.
So as I mentioned last time, in about 2 years' time, 2 to 3 years' time, I expect us to be back at the peak margins that we had achieved around 2010. As far as this year is concerned, I foresee headwinds continuing to be there, the impact of COVID continuing to be there, and then cash flow issues. So that's why we have given a guideline of about 11 to 12% as far as this year is concerned.
Okay, sir. And just a last question from my side is on the competition front. So, we see a lot of road contractors talking about entering into the building space and expanding their own, segment portfolio. So how do you see that in different, government projects?
In the short term, I'm repeating myself. I said this last time around also, the competitive intensity is increasing. That's why our order guideline is conservative for this year, because we don't want to be too aggressive.
Okay, sir. And just on the hospital side, but still, the competition tends to be lesser. Is that a right understanding?
No, but it's increasing there also.
Okay, sir. Okay. Fine. Thanks, Shobhitji, for taking my questions.
Thank you, Charanjit. Thank you.
Thank you. Before we move to the next question, we would like to remind participants to ask a question. You may enter star and 1. We have the next question from the line of Vasudev from Edelweiss. Please go ahead.
Hello. Am I audible, sir?
Yes, Vasudev, you are. Hi.
Yeah, hi. So thank you for the opportunity. If you could help us with the capex that we did in Q1 and what is the amount that we plan to spend for the rest of the year?
Okay. Can you repeat the question?
Q1 capex.
Q1 capex is 7 crores.
7 crores. And what do we plan for the remaining part of the year?
It will be more or less the same every quarter. So it will be around 30 crores for the financial total year.
Okay. Thank you, sir. And one last thing, if you can tell me the inventory balance that we have as on 30 June.
This is 41 crores.
41 crores. Okay. And our gross debt, just to confirm, is 22 crores, right?
Yes.
Okay. Yeah. That's it from my side. Thank you and all the best.
Thank you.
Thank you. Participants, if you have a question, you may enter star and 1. We have the next question from the line of Parth Naveen Bhavsar from Dolat Capital Markets. Please go ahead.
Yeah, hi sir. Thank you for the opportunity and congratulations for a really good set of numbers. So just wanted to know that the L1 that you said that you've been awarded L1 of around 1160 crores. So if you could help me with the breakup, like in terms of location and value, and when do you expect to get the LOA?
One is in Calcutta, Rajarhat. This is 250 crores. It's a government tender, residential, for HIDCO. That the award should be happening in the last week of this month. The other is for BCD, Bihar Construction Department. It's a large animal husbandry and veterinary university for 890 crores. That should also be awarded in this month.
Okay, perfect. Thank you. That's it from my side.
Thank you.
Thank you. Participants, if you have a question, you may enter star and 1. As we have no further questions, I would like to hand the floor to Mr. Varun Ginodia. Please go ahead.
Thank you, Malika. Thank you so much, sir, for answering all the questions patiently. And I'll hand over the call back to you for any closing comments.
Thank you, Varun. Thank you, everybody who joined in, and look forward to interacting with all of you again in a few months' time. Thank you so much. Bye.
Thank you, members of the management and Mr. Ginodia. Ladies and gentlemen,
Thank you.
Thank you.
Thank you.
Ladies and gentlemen, on behalf